Good morning. My name is Sandra Smith, and today I'll be discussing the case of the Commissioner of Taxation versus Anstis, which is in reference to the deductibility of self-education expenses in relation to government assistance payments. I'll begin by establishing how the case came to be. In 2006, Miss Anstis was a full-time student studying a teaching degree at the Australian Catholic University. She worked part-time as a sales assistant, where she received $14,946 worth of income for the year, and was also entitled to uncollected youth allowance payments of $3,622 from the Australian Government. In her 2006 income tax return, she claimed self-education expenses of $920, which included costs associated with travel, purchasing teaching supplies for her study rounds in classrooms, student administration fees for her university, textbooks and depreciation for her computer, which she declared as expenses incurred in gaining or producing her youth allowance payments. On lodgement of her income tax return, the Commissioner denied her self-education expenses on the basis that her income from the government was not subject to Section 8(1) of the Income Tax Assessment Act. The taxpayer objected to this decision, and again the Commissioner disallowed this deduction. This was then reviewed by the Administrative Appeals Tribunal, where they agreed with the Commissioner, stating that expenditure must be incidental and relevant to the derivation of income, as opposed to being incurred as a prerequisite of deriving the income. Miss Anstis then appealed to the Federal Court, where the Court found in favour of the taxpayer. The reasons summarised by the judge were that the expenses were not incurred to put her in a position to receive the youth allowance. They were incurred as a necessity to her course of study. Furthermore, to qualify for the youth allowance, she must have satisfied the activity test. As such, to satisfy the condition, she had to incur expenses. Therefore, these expenses were incurred in gaining or producing the youth allowance within the meaning of Section 8(1). The fact that Miss Anstis' motive for undertaking the course was to acquire a qualification which would lead to further employment was irrelevant to the characterisation of the expenses, and it was found that the expenditure was incurred as a necessary incident of deriving the youth allowance. Therefore, it was deductible as a self-education expense. The Commissioner, dissatisfied with the outcome, appealed to the full Federal Court. The Commissioner argued that the expenditure was not incurred as a necessity to derive the youth allowance, as the expenditure would have been incurred by the taxpayer, irrespective of the youth allowance payment. The full Federal Court argued that the taxpayer was paid to undertake the course of study in a particular manner, to a particular standard, and make satisfactory progress. On these grounds, the Commissioner's characterisation of the taxpayer's activities was rejected. Furthermore, the Commissioner stated the purpose of obtaining the degree was to gain employment as a teacher, not to obtain the youth allowance. The Court did not argue this fact. However, they found it to be irrelevant to the case, as Section 8(1) is concerned with whether the outgoing was incurred in the course of deriving assessable income. It is not concerned with whether the expense was incurred for the purpose of deriving assessable income. Now, the Commissioner was not keen to settle on this and appealed to the High Court, which is the case I'll be discussing in depth today, stating the issues to be addressed was whether 1. The youth allowance was assessable income, 2. The self-education expenses were incurred in gaining or producing assessable income, and 3. If the expenses were incurred, they should be disallowed as they were of private nature. When the case reached the Court, these issues were addressed as follows. The argument of the youth allowance being assessable income, the following cases were brought to attention. Federal Commissioner of Taxation versus Myra Emporium. The reference to this case comes from the description of income outlined as the periodicity, regularity and recurrence of a receipt has been considered to be a hallmark of its character as income in accordance with the ordinary concepts and usages of mankind. Following this case, and to further back up their claims, Federal Commissioner of Taxation versus Dixon outlined that compensation income received by a soldier while he was at war from his employer to compensate for the difference between his salary wage and his soldier wage was considered assessable income due to the expected periodical payments which were relied upon by Dixon and his family for regular expenditure. When considering the outcomes of these cases, it could be found that the regularity of the periodical payments and the dependence on the youth allowance payments for regular expenditure would consider the youth allowance payments a substitution of income and therefore assessable income under Section 25. To further support this claim, Section 5110 of the Income Tax Assessment Act provides that for the full-time student, a scholarship, bursary, educational allowances or assistance is exempt income. However, Section 5135 outlines that Commonwealth education or training payments, which is defined to include youth allowance, is specifically excluded from the payments outlined as exempt in Section 5110. The court found that youth allowance payments were relied upon by the recipients for regular expenditure so long as they satisfied the requirements of the allowance, and as such the payments were income according to ordinary concepts, consistent with the assumption in Section 5110 of the Income Tax Assessment Act, where payments of educational allowances or assistance were income according to ordinary concepts. For the decision of whether the deductions were incurred in gaining or producing assessable income, I'd like to begin by outlining the sections of the relevant acts which are referred to in the outcome of this decision. The following provision concerning deductions for Section 8.1 of the Income Tax Assessment Act, which provides the relevant part as follows. 1. You can deduct from your assessable income any loss or outgoing to the extent that it is incurred in gaining or producing your assessable income. And 2. However, you cannot deduct a loss or outgoing under this Act to the extent that it is a loss or outgoing of a private or domestic nature. Furthermore, Section 541 of the Social Security Act states the relevant criteria for receipt of youth allowance as follows. 1. Satisfy the activity test, which states the person is classified as undertaking full-time study where the person is A. Enrolled in a course of education in an educational institute, B. Undertaking in the particular study period for which she is enrolled or intends to undertake in the next study period, C. Partaking in at least 3/4 of the normal amount of full-time study, D. The course is an improved course of education or study, and E. The person is making satisfactory progress towards completing the course. They also must be of youth allowance age and an Australian resident. Now, I'd like to highlight that the depreciation of the computer was not questioned by the Commissioner. The questions arose from the other self-education deductions, including travel, purchasing teaching supplies for her study rounds and classrooms, student administration fees for her university, and textbooks. The case of Tin NL versus the Federal Commissioner of Taxation was brought up where the case held that for a loss or outgoing to be deductible, it is both sufficient and necessary that the occasion of the loss or outgoing should be found in whatever is productive of the assessable income, or, if none be produced, would be expected to produce assessable income. The High Court found that the statutory right to payment would be retained so long as the taxpayer maintained her qualification for payment. To maintain her qualification for the payment, she had to incur expenditure. The reason or motive of the taxpayer's expenses was not a determination of whether they were incurred in gaining or producing income, and as such, the outgoings were found to have been expenses incurred to gain or produce income by retaining her entitlement to the allowance. For the instance of the expenses being of private nature, the Commissioner argued that the expenditure was private in nature as it was an attempt to better herself as an individual, essentially an investment in human capital. However, the Court provided the finding in the Federal Commissioner of Taxation v. Finn, where outgoings incurred for the genuine purpose of acquiring or maintaining knowledge and skill in a vocation do not become an outgoing of a private nature, simply because the taxpayer got pleasure and satisfaction in increasing his knowledge and attainments. The Court found that the taxpayer's reasons for obtaining the degree did not deny the circumstances that expenses were incurred as a condition of her receipt of youth allowance. The expenses did not lose their connection with the conditions of her youth allowance payments simply because her reasons for studying were anything other than enjoying the benefit of the youth allowance. There was no sufficient foundation to conclude that the expenses incurred by Miss Anstice were private in nature within the scope of Section 8.1. Following these findings, it was held that the appeal be dismissed with costs. Subsequent to the results of this case, the ATO then considered the taxpayers who were affected by the outcome and wrote to all taxpayers who declared AusStudy, AbStudy and youth allowance in their income tax returns for the years ending 30 June 2007 to 30 June 2010 and allowed them a standard claim of $550 in expenses for each year they qualified, which was based on information published by academic institutions that an average $800 was spent by students per year, less the $250 deduction limit. Taxpayers were able to claim more self-education expenses where they had invoices to substantiate their expenses. However, the outcome of this case sought to highlight to the government the need to address the inconsistencies in the Income Tax Assessment Act which allowed these deductions. Evidently, in 2011, the federal budget announced the intention to change the law to prevent deductions being claimed against government assistance payments from the 1st of July 2011. On 20th of January 2012, they introduced Section 2619 to the Income Tax Assessment Act 97, which states, 1. You cannot deduct under this Act a loss or outgoing to the extent that the loss or outgoing is incurred in gaining or producing a rebatable benefit, and 2. To the extent that you use property in gaining or producing a rebatable benefit, your use of the property is taken not to be for the purpose of producing assessable income, if subsection 1 would stop you deducting a loss or outgoing if you incurred it in the income year in gaining or producing the rebatable benefit. This section now subsequently denies any deductions against government assistance and allowance payments from the income year ending 30th of June 2012 and all years moving forward. The implications of this outcome for tax practitioners means that advice given to taxpayers would limit the deductibility of self-education expenses, as per Tax Ruling 98.9, which outlines the following principles to self-education expenses. 1. The cost of improving knowledge or skills is not an outgoing of capital. 2. Expenses incurred in keeping up to date or to better enable the taxpayer to discharge existing duties or to earn present income may be deductible. And 3, where 2 does not apply and a new or further qualification is sought, there must be at least a high probability that it will lead to an increase in earnings if the cost is to be deductible. The qualification need not necessarily give rise to an increase in salary, and it will not be sufficient to simply establish the employer encouraged the employee to undertake the study. The cost is not deductible if the taxpayer is not currently occupied or employed in an area that makes the study necessary or desirable. And 4, the deduction is allowable for self-education expenses where the study is to enable a taxpayer to get employment, to obtain new employment, or to open up a new income-earning activity. Deductible self-education expenses are listed as tuition or course fees relating to an education, institution, or work-related conference or seminars, cost of textbooks, professional and trade journals, and photocopying, fares incurred on attending overseas study tours or work-related conferences or seminars, motor vehicle expenses incurred in travelling between home and study and back again, work and study and back again, or the first limb of the journey where the taxpayer travels between home, study and work. Interest on monies borrowed for the above-mentioned expenses, and depreciation may be claimed on professional libraries and other items used in connection with self-education, such as computers, filing cabinets and desks, as well as the interest on monies borrowed to fund such purchases. Due to the amendment to the Income Tax Assessment Act, no government assistance payments will be open to deductions since the amendment was enforced in the 2012 financial year. In summary, the case of the Federal Commissioner of Taxation versus Anstis highlighted the need of the government to amend the Income Tax Assessment Act to disallow deductions against government assistance payments. Evidently, the payments from the government are there to assist individuals and not to be used against the government to allow for further deductions in income tax payable. It was an interesting case with a remarkable outcome which benefited students for the years with which the deductions were subsequently allowed. Ultimately, it led to a revision of the Income Tax Assessment Act, which established that moving forward, the deduction would no longer be accepted by the ATO. I hope you've enjoyed this presentation as much as I've enjoyed researching and explaining it. Once again, my name is Sandra Smith. I hope you have a great day. Thank you.